Progress in the fight against inflation seems to have stalled. Is the Fed going to keep rates higher for longer? When can we expect that first rate cut? In this video, we'll look at the data to see what to expect. The two key inflationary measures, the CPI and the PPI reports, came in for March hotter than expected. The CPI, the Consumer Price Index, is a measure of the total value of goods and services that consumers have bought over a specified period of time, while the PPI, the Producer Price Index, is a measure of inflation from the perspective of the producers. If you look at this chart, it gives you a better picture of the relationship between headline CPI, which is the index for all items, and the core CPI, which excludes volatile food and energy prices. In March, headline CPI was 3.5% year over year, which was higher than February's 3.2%, and core CPI was at 3.8%, which was the same as February. So you can see that we're almost going backwards in this progress against inflation. Also this week, the Fed released their minutes from the March Fed meeting, and it gives a better understanding into the economic outlook of the members of the committee. According to the minutes, the members agreed that in assessing the appropriate stance of monetary policy, they would continue to monitor the implications of incoming information for the economic outlook. They also agreed that their assessments would take into account a wide range of information, including readings on labor market conditions, inflation pressures and inflation expectations, and financial and international developments. So what this means is that even with the Fed's projections, nothing is set in stone. The Fed is relying on the data and the economic reports to make that decision on when that first rate cut is going to happen. According to the CME Fed Watch tool, the probability that the first rate cut will be in June went down from 70.8% on March 20th to 26.24% today. In fact, the market is even uncertain whether that first rate cut will be in July or in September. The Fed's preferred inflation report is the PCE, the Personal Consumption Expenditures Price Index, which will be released in 2 weeks. So we'll have a clear understanding of what to expect after that comes out, which will be just in time for the next Fed meeting at the end of this month. So like I've said before, don't worry about the things that you can't predict or control. Focus on the things that you do have control over, like budgeting and saving and improving your credit score. Now, I'm not a financial planner, but if you need help with anything, reach out to me and I can point you in the right direction. I hope this was helpful. Like this video and subscribe to my channel, and share this video with someone you know that would benefit from this information. Thanks for watching. Have a great day.